Hi, everyone. I'm Eric Ervin. I'm the CEO and founder of Blockforce Capital. And with me, we have the co-portfolio manager, Brett Munster. For purposes of this recording, it's January 2025. And obviously, this is not meant to be a solicitation, so please review any of the prospectus or other information if you want to take a look. You can reach out to us. We'll put our contact information at the end. I just wanted to give you a quick background on why I founded Blockforce Capital and what the idea was or what the landscape was at the time. I was running a company called Reality Shares, which is an exchange traded fund business. And it was around 2016 that we first started to explore blockchain technology, cryptocurrency, the whole ecosystem and the growth of the crypto ecosystem at the time. And we decided to start to put our own personal capital to work in several different strategies. I've always been a quantitative oriented portfolio manager in the way I think about things and the way I think about markets. And I never seen an asset class that had more potential for opportunity, but also significant potential for risk as well. And what I saw traditionally, a lot of asset managers think about risk management and other things. Whereas this asset class, you had a lot of cowboy crypto hedge fund managers and just starting up two guys in a garage, opening up a hedge fund. And so I saw a real opportunity for us to create a true asset management enterprise where institutional capital could come into the market and actually get exposure to this asset class without all of the stomach acid that goes along with it. And so now, fast forward, it's been 5.5, almost 6 years since we launched our first fund, the multi-strategy fund. And this was really kind of a culmination of our best ideas. So we're really proud of the performance that we've been able to deliver. Lower risk than Bitcoin, with a little bit more upside to Bitcoin, and we do that by essentially capturing about 80 to 90% of the upside, with about 40 to 60% of the downside, and over time delivering greater returns than a long only Bitcoin investment, but without all the volatility on the downside.
What really sets us apart, I think, in the marketplace is three different things. The first is that strategy that Eric just alluded to. Most crypto funds out there tend to be long only, or they tend to be market neutral only. We take a little bit different approach, I think a unique approach in the asset class, where we try to capture as much of that upside as we can, but we're also hedging and mitigating a lot of that downside. And we'll talk more in detail later in this video on exactly how we do that. But this differentiated strategy we think is unique in the marketplace. We're also a team that not only has a deep experience in traditional asset management. Eric worked at Morgan Stanley for nearly 20 years. I worked at a venture capital fund in Silicon Valley for almost a decade. But we've also been investing in this asset class for over a decade as well. So there's very few fund managers out there that we've seen that have this kind of depth of experience, especially a decade of experience investing in crypto. And lastly, our now almost 6 year track record is one of the longest running and one of the best performing crypto hedge funds in the market today. So those three things, our strategy, our team, and our track record, we think really sets us apart from other funds out in the market today.
I alluded to this a little earlier, but it's the idea is actually to build a hedge fund with a volatile asset class like this. You don't need to add a bunch of leverage. You don't need to shoot for the stars. You really just want access to the asset class. You want some of the exposure to the asset class, but you don't want all the stomach acid that comes along with this asset class. And that's kind of the design of the fund. We built it with an asset allocation approach where we have a portion of the fund that's allocated to quantitative systematic strategies and a portion of the fund that's allocated to directional exposure to the market so that we can blend those two together and capture a smoother ride to the top without all of the volatility, as I mentioned. It's one thing to put up good numbers in a raging bull market, but it's been a pretty volatile market across all different asset classes. And we've been able to deliver this against Bitcoin, against some of the other crypto assets, but certainly against the tech industry, against all of your traditional benchmarks from commodities to frontier markets to emerging markets to NASDAQ, really delivering a solid return that you could add to a portfolio and be proud of. And we're not trying to say that every month or every year or every quarter we're going to outperform a long only investment in crypto, let's say just owning an ETF that owns Bitcoin, for example. That's that's a great strategy, and we don't advocate against that. What we essentially wanted to do was to capture a unique, non-correlated return that has the characteristics of a long only investment in Bitcoin without a lot of stomach acid.
Eric alluded to this a little bit earlier, but the way we do that is we've got two portions of the portfolio. So we have this fundamental growth portion of the portfolio where you can really think about this as beta capture. And we combine that with a much more short-term oriented algorithmic trading portion that trades autonomously 24/7, 365, that has a low to near zero correlation to the overall crypto market. And you can almost think about this similar to how you think about a 60/40 traditional portfolio of stocks and bonds solely within the crypto asset class. And so, we have a target allocation of this long only upside, similar to you would have a 60% allocation to stocks. And then when that market turns and when we get that volatility, especially the downside, we lean much more on that algorithmic trading portion of the portfolio to stabilize the fund. That's how we prevent a lot of the big crashes that happen in this industry.
On the one hand, you have your kind of return enhancers, and then on the other, you have your risk reducers. In this case, the risk reducers are also designed to achieve some pretty significant returns, just not shoot the lights out, up 300 or 400% type returns. They're a bit more on that kind of 20 to 30% annualized returns.
So I cover a lot of the fundamental growth portions of the portfolio. This is really where we get a lot of that beta long-term exposure to the asset class. And while allocating to a Bitcoin ETF is great, Bitcoin's only roughly half the industry. And so you miss out on all the other innovation, all the other disruption that's happening. And we think there's a lot going on, especially in terms of layer one networks, scaling solutions, DeFi, on-chain infrastructure, AI, as well as stablecoins. What we do is we develop these theses and we track a lot of these best performing networks within each of those subcategories. And then we're able to see in real world data, real world time, which networks are actually performing, which ones are gaining market adoption. And so we can use real world traction data to help us sift through, just what is a plethora of tokens out there. That's how we make a lot of our data driven decisions. And our goal is to hopefully own, the best performing networks in each of these subcategories that gives us this broad, diversified, long-term exposure to the growth of this overall asset class.
As part of this, the idea is that, how do we get the exposure to the asset class, but how can we also reduce the volatility? A long only bet is available for some investors. In fact, a lot of venture funds get that exposure to a long only strategy, but they were also down 80% plus in certain markets and years. I can't think of a single investor that wants to sit through an 80% drawdown to achieve, the potential upside, but it's just not worth it as far as we're concerned with our core net worth. And so this is why we've delivered very consistent returns without a lot of that volatility that happens on a month over month basis. It's not to say that we're not going to be down during certain periods, but we just try to be down a lot less given our portfolio allocation. Large part of this comes from the team. We've assembled a team of professionals that have been in the industry and have a great deal of experience with making mistakes and with seeing what others have done and a professional approach to asset management. We've seen other funds really blow up their great track records by doing either too much leverage or high concentration or counterparty risk. There's all of the major things that can blow up an asset management firm. We've seen that from other firms, and we spend a lot of time dedicated to risk management.
That's the quick overview of Blockforce Capital. Please feel free to reach out to us. You can email us at invest@blockforcecapital.com. You can also reach out to the head of our investor relations and partner in the firm, Evan Katz, at evan@blockforcecapital.com. We'd love to have a conversation with you, dive more into detail, and answer any questions you may have. So please reach out. We'd love to speak with you.
Thanks, everyone.